Hello and welcome to Zak's Traders Cafe. Today I'm joined by Christopher Nicholson, who is head honcho at ACF Equity Research. How are you today, Christopher?
I'm very well, Zach. How are you?
I couldn't actually remember your exact title, so head honcho is what, but you are a head honcho, really, aren't you?
Well, yeah, managing director and head of research.
Yes, well, it's what is interesting about, I think we've spoken before, but what's interesting about this conversation is that I think you're probably one of the few people in the world who is more well spoken than I am, and I sort of feel like a cockney when I speak to you.
That's very kind of you, Zach. Although I'm not sure everybody likes it.
No, in fact, it's probably the most hated accent in the world. So I think we should both. I should revert to my native Glaswegian accent, which I can't do anymore without offending the whole of Glasgow as well. So it is a problem. But when I was young, it was like you aspire to speaking like this, and that was a mistake. But anyway, we'll go on to the real world, which is perhaps just as important. I think the thing that struck me this week in the markets was well, it wasn't quite the markets, but it was the Trump always chickens out phrase, which somebody who has obviously got a suicidal or sort of either suppose a masochistic or death wish said to him, you are famous, Mr. President, for being taco, always chickening out. And what do you think about it? And he said it was a nasty question.
Well, I think the point is that it gets him a lot of meetings, mostly with very angry people as a result. But clearly he enjoys that.
Yeah, but it seems to be idiotic. I think the last thing was, the taco thing came. For people who haven't made millions or billions of pounds out of it, the market dipped at the end of, or it was at the beginning of April, in fact, rather massively. So 10-15% falls in equity, something like that. And clever people bought the dip on the basis that one, I suppose, it was the beginning of the new tax year, so it was a good time to buy stocks in the UK, April the 5th. And the second one was that the proposals from Mr. Trump were so ridiculous, and the market was, on sale. Shares had fallen so far that the risk reward of buying FTSE at 7,600 as opposed to 8,500 or 8,600 was great, and 36,000 on the Dow. Let's do it. But the point there is that within a few days, it was clear that Trump wasn't going to do anything. Well, he was going to. It was all talk. Let's say it was talk, and it wasn't something which was set in stone. And so, anytime there's a dip on tariff fears, since that time, you buy the market, and that's the taco trade.
Yeah, I mean, the point is that at the moment as well is that it's quite a good opportunity to reconsider the taco trade because the VIX has calmed down. It's back at its 20-year average, essentially around 19 or so. So that's a good basis for buying a put and a call at the same time. So you can
I mean,
benefit
no,
from
but
volatility
you got
if
you
it
got me on
spikes.
the you've got me on the VIX there, because the VIX is something I've been aware of since the 90s, when I was a derivatives broker, which is hard to believe, because you probably wouldn't think I could successfully make a cup of tea, but I was in that area. And I suppose 30 years later, the view I have is that the best time to buy the stock market is when the VIX is through the roof. And so, presumably, I didn't actually look at the VIX because I regard it as a counter indicator. But actually, what's useful about it was when it goes to say 50 or whatever, when it's maxed out. That's when
Now,
you buy the market. You fill your boots with the market.
well, that's one way of looking at it. But if you're doing that, if you're buying a put and a call and the VIX is at a long-term average, say 19, whatever, then your premium should be pretty low. And you benefit. And if you think there's going to be volatile moments, then you win either way. So you win if the stock goes up, you win if the stock goes down. So I mean that's how I would think about it if you were using the taco trade as a
Mm.
long straddle.
So, I mean, how do you think we're going to end up with the tariffs and everything else? I'm putting you on the spot rather than me.
Okay, so it's a it's a good question, isn't it? I wake up every morning and something it's different and it's dramatically different, and the market's taking it in its stride. I mean, economically, it makes no sense. The calculations are nonsense. But it is a great soundbite, and that does drive Trump to do it. Um, if we are thinking about what does it do for returns, well, that kind of leads us a little way into, a discussion on the small cap revival, change of fund flows out of the US. They are finding their way to Europe. Um, it's still quite specific. I mean, Germany's doing very well. Polish wig is absolutely on fire. Um, FTSE, it is benefiting for certain, but we're early stages. But then the question is, is any of that going into small caps?
Well, I mean, I think the small cap area, which as you know, is my that's my thing. We've had over the last couple of months amazing one-off stock rises. So, sort of specific situations where market was surprised by a fundraise which went through, or it was surprised by a company which normally makes donuts going into Bitcoin Treasury, or I mean, things which have, I suppose, I mean, the main things which have come through, actually, the main rises have been on the back of funding, but proper funding, not just like making, 200 grand to pay the CEO's salary, but proper funding for small cap companies, which I think is a thing. And I suppose surprising the market with good news. But we've had, and I suppose, yes, the surprising market with good news, but the AI thing has been a big winner. The funding yourself properly, even if you're diluting yourself to death, and obviously if it's non-diluted, it's even better. But the AI companies that have just gone on the AI bandwagon, they've gone through the roof. And then the companies that have gone into Bitcoin Treasury, they've gone through the roof. So that's enough to make things rather more happy in the small cap world. And what's also been interesting in recent weeks, rather than waiting for the summer when everyone's obviously on the beach, companies have chosen, April, May, especially May, to raise money rather than waiting for, July and, being in trouble. But I think the other thing with small caps is that things have got so bad in terms of companies, either, the ones that are going to leave the market have left, the ones that are going to go bust have generally gone bust. So it's a bit of a survival of the fittest left, and they have been the ones which have actually got the AIM index to go through, 700. We're about 20% off. 20% in a month is just amazing. Or 6 weeks is amazing. So I think there is the interest. I think it's also a situation where, like the pandemic, when the real world gets nasty, and in national insurance and tax and all the other stuff that Labour has done, then in a way that people go to the stock market. I mean, it's like one of the few places where you can invest without having all the red tape and all the other rubbish that you get as a business owner. So it becomes a proxy for doing that. So you try and buy into good businesses or good situations. So it is looking better.
You can see that. Yeah, so you've had that uptick in AIM. I mean, you probably experienced it as well. There's just a general sense that we might be at the beginning, or we are, there are definitely indicators suggesting we are the beginning of a small cap revival in the UK. I think Germany's small cap index, the better quality one, the SDAX, is I think it's maybe done 7, 8, maybe even 10% over the last month or two. So you've got on the quality small cap indexes in Europe, they're slightly ahead of us, I feel. But that also means that it could be good timing if you've got the cojones for it. It could be good timing for UK small caps, and they are desperately undervalued. That's for certain.
Well, I'm sure the undervalued thing. I don't think that the things which have risen because of undervalue, which is, so in a way that's a good thing, because that undervalue money is probably yet to come. The money that has come in has been for the special situations and the companies just trying to get
Yeah.
on the zeitgeist of, as I said, the Bitcoin Treasury or the AI. We're going to be ACF PLC is now going to be an AI Bitcoin Treasury company. It's like, oh wow, fantastic, 10x. So it's something to think about actually. But it's probably going to be a bit more mileage in that, in the sense that if you're a washed up small cap, you've either got the AI direction to go in or the Bitcoin Treasury thing. And if you can combine the two, which I'm thinking about actually, I mean, how could you combine the two? You would have, I suppose, you'd have an AI trading system for your Bitcoin Treasury. That's probably the something like that.
I mean, it makes a lot of sense. Our kind of view on it is that holding physical coin is nonsense. I mean, it's going to go, and that's all there is to it. So cryptocurrency, BTC, obviously being, Bitcoin being the most credible one, although it suffered a few scandals, of course, the last 12 months. And Trump, ironically, him backing it, I don't think really helps Bitcoin in terms of credibility at all. I know I'm not alone in that
It
view.
makes it look shady and dodgy and a bit ranty.
Well, after his meme coin,
Yeah.
which rallied dramatically and then, of course, collapsed as meme coins do, certainly hasn't helped. And yes, you're right. It all seems a little bit in the family, etc., etc., at the expense of loyal supporters, possibly. But overall, the strategy of holding cryptocurrency, I mean, it's pretty much a no-brainer. Why would you want to stuff your pockets full of coin? And many small businesses now only take electronic payments, and that all points towards cryptocurrencies, etc.
Yeah, but what happens if there's a hack? There's an AI hacker who manages to hack Bitcoin, and it's 110
Did
now.
he?
No, I'm just saying it's 110 now, and
Oh,
tomorrow we wake up and it's at $10,000. What happens there for all the Bitcoin Treasury merchants?
well, I mean, from
It'll probably all
if you're going to
geared
make
up,
me,
leveraged.
yeah, I mean, if you ask me from an analyst's point of view, I can give you a really boring, prosaic answer, which is that nothing, because from an accounting perspective, it only devalues. You can't write it back in unless you sell it.
Hmm.
So nothing
All right,
is
okay,
what
well,
happens to them.
no, that's good.
But however, nothing happens to them in terms of balance sheet value of that fungible asset, and it's treated basically as a cash asset essentially.
Hmm.
Um, Although it's booked as an intangible. So that's the boring bit. The more interesting bit is that if you get a hit, of course, if it's a positive hit, it's going to affect the equity price. If you wake up in the morning and your crypto is 10x up in your treasury, that is going to be reflected in the share price if you are a public company.
All right,
So it adds volatility, which is great if you are taking short-term positions, etc. I
no.
mean, if it's up, it's great if you're taking a long-term position as well. But it does add volatility, and some people stay away from that.
I suppose you've got I mean, a small cap company, let's say it's worth 10 million, it buys, 30 Bitcoin or whatever it can afford. On the basis of what you're saying, if it goes well, the share price will go through the roof. So that's great. If it goes badly, well, it's like, okay, well, we're just there for the long haul. But you have a chance of your share price going from, 10p to a pound. Whereas if you were just making widgets, it'll be from, 10p to 15p to 13p. It's just really boring. So you have a chance of having a high watermark or a high tide in your share price where ordinarily it wouldn't have happened.
Yeah, I mean, you do.
Obviously, the
I suppose
downside.
the question, well, the downside is that I guess you will still get volatility if it goes down. But I mean, this comes back actually to your taco trade point, which is if a company is taking a large treasury position in Bitcoin or similar crypto, uh, that company may well be an ideal opportunity for a taco trade.
Hmm. All right. Well, I think we've probably exhausted the taco thing. I actually hardly ever read the Financial Times because it's so woke and normally so wrong as well. But it's wrong because it has to interpret everything in a sort of lefty money-hating, wokey sort of way. So it's difficult to,
They've also lost the staff. They don't have the depth of team anymore. I
yeah, well,
mean, for what it's worth,
yeah,
the one thing I read regularly now is The Economist, in terms of old school hard copy.
I don't think I can read that either. But anyway, you're obviously a stronger constitution than I have. But the reason that so the TACO acronym was coined in the FT the week before last, and I just happened to read it because I just I still can't believe the FT is so crap. So I just read it now and again just to check that it is still crap. But they actually originated that, which is obviously a lefty, wokey, Trump-hating concept. They weren't going to say Trump's fantastic. It's not whatever the opposite of TACO would be. They're really going to throw mud at him. So I actually saw that in the long view, and thought this is actually quite it. This is the first time in like 30 years I've read anything in the FT which is any good. But then the other thing, going back to what you said, and they've lost their staff, but they don't sort of say, oh, Christopher Nicholson, can you write a bit for us, or Zak Mir, can you write something completely inane or innocuous or whatever whatever it's going to be. They stick with these people. I don't know where they get them from. It's very weird with the.
I used to write for them a long time ago as a freelancer when I was starting my first business. It had various upsides to it. I mean, you got paid.
So obviously, you're not there now. So
no, that was 25 years ago.
Exactly. So that's sort of when it was good. Yeah, so that's when it was good.
Yeah, right? When it still had depth of journalists and editorial and specialists. You used to have a telco specialist, that kind of thing. And now that not in a million years.
You've just got money haters now, and people who write about what they did on their holiday, and obviously you're going to have this type of person, that type of person, and it's all that kind of thing. But you can't have somebody who's well spoken is included in that. So that's the end of that one. But
coming back to your Trump, you asked me earlier, what did I think about Trump tariffs? Where did I think they were going? I think it plays in very nicely to the small cap space, because if you consider that most small caps, so apart from healthcare, which may still suffer, apart from healthcare, if you are exporting into the US market, or you have a globalized giant structure supply chain, you suffer from tariff barriers terribly. But if you are a small cap and your market is your home market, or at least your market is not the US market, you stand to benefit considerably, because from an investor point of view, you're easier to understand. Global supply chains are sort of out of vogue in inverted commas. If you're a giant business, it's less attractive with tariffs left, right, and center. If for no other reason than it's very difficult to understand how price will develop in terms of valuation. But if you change your mind and say, do you know what? Let's go simpler. Let's understand a company that basically sells into its home market, or put another way, does not sell into the US market. That becomes more attractive, and that's mainly smaller and mid-cap companies. They're selling into their home market, or they're selling into a neighboring market like France, or if we talk about Europe, European Union, or whatever it is, or if it's Asia, they're trading within the ASEAN. So they're less affected by tariffs, and they're simpler to understand.
Well, that's a great idea, but the problem with the TACO concept says that after all this noise, actually in the end will either be the same, we'll just be about the same as we were before he started all this. So it's sort of
except for complexity. I think it probably will even out pretty similarly. I mean, there was no doubt that Trump had a point with that the tariff system was unilateral, shall we say, or asymmetric, and the US was more open than a lot of other markets, particularly the EU. I mean, he was absolutely spot on with that. His approach to it, as we've said before, do I fix my computer by opening up the top and hitting the motherboard with a hammer, or do I consider it to be a technical sort of surgical type of operation? Well, he's gone for the hammer, but actually trade tariffs and trading is a surgical operation. So point is correct. Approach certainly open for debate.
Well, I think on that note, as you've given me the answer to the most difficult question, I think it's probably a good place to stop. Quit on a high. Christopher Nicholson from ACF Equity Research, thank you very much, and hopefully we will speak again soon.
I look forward to it, Zach. It's always a pleasure.
Cheers.